Let me tell you why this is a bad idea. You need central bank independence away from the government. The Federal Reserve and the federal government are two different things. The central bank is responsible for two mandates. One is employment and price stability. If this goes through, you're going to see a lot of market volatility. You're going to see the overnight rate drop. It should drop, but not because of political pressures. You're going to have a negative effect on the dollar, which means that imports are going to get more expensive. It'll be good for exports, but it'll be bad for imports, which is what Trump wants. He's wanting to reduce the trade deficit. You'll see a stock market downturn because they'll introduce volatility. If rates are now set based on political pressure, that's a terrible idea. What'll end up happening with the yield curve? If this rhetoric continues, you'll see this overnight rate drop more because it'll start pricing in a removal of central bank independence, and then this long end of the curve will steepen. The long end of the curve is what matters most. It's not the overnight rate. This is the long end of the curve. This is the 10-year rate. The 10-year rate goes up, which expect that it will, because if they drop the front end of the curve, inflation expectations will now go to the long end of the curve, and the long end of the curve will rise. That will hurt mortgage rates. Mortgage rates will rise and will rise significantly. Not only that, you have a debt problem, which is going to exacerbate the problem. So all in, if you think that going after the Fed is a good idea and you think that's going to help rates, it's a terrible idea. Not only that, Trump has $100 million in bonds. He wants rates to fall, but the way he's going about it by bullying the Fed is not the way to do it. It's going to have the exact opposite problem that he is planning for.